global markets in turmoil. Shifting policies reshape currency trends and investor strategies. The financial world is abuzz with speculation and concern as significant shifts in currency values shake up global markets. The US dollar, long considered a cornerstone of international finance, has seen a sharp decline, prompting questions about the stability of global trade and the future of economic policies. How will these changes affect global economies, and what strategies can investors adopt to protect their portfolios? Stay with us as we dive deep into the unfolding scenario, exploring its causes, implications, and expert insights to help you navigate these uncertain times. This analysis could change the way you view today's financial markets. Over the past 48 hours, the US dollar has experienced one of its steepest declines in recent years, falling against a broad basket of global currencies. This decline, triggered by a combination of shifting trade policies and economic uncertainty, has sent ripples through financial markets worldwide. Major currencies like the euro and the yen have surged, while emerging market currencies have displayed varied reactions. Simultaneously, commodities and government bonds are drawing increased interest from investors seeking safer assets during this volatile period. But what exactly has caused this shift, and what does it mean for the average investor? At the heart of the issue lies a series of recent trade policy announcements aimed at strengthening domestic economic activity. These measures include proposed tariff adjustments and incentives for local industries, but their lack of specificity and unclear timelines have left markets uneasy. This uncertainty has compounded existing concerns about inflation, supply chain disruptions, and slowing economic growth, creating a perfect storm of volatility. The US dollar index, a widely used benchmark for the dollar's performance against other currencies, has dropped 1.5% over the past 2 trading sessions, marking its sharpest decline in over a year. Financial markets across Europe and Asia are reacting in diverse ways. In Europe, indices like the FTSE 100 and CAC 40 have shown resilience, buoyed by the perception of stability in the region's financial systems. The European Central Bank's recent moves to address inflation have added a layer of confidence, encouraging investors to shift their focus to Eurozone assets. Conversely, Asian markets, particularly in export-heavy economies, are facing challenges. The Nikkei 225 has experienced declines as concerns about supply chain disruptions intensify, while the Shanghai Composite remains stable, reflecting cautious optimism about domestic growth. One of the most significant impacts of the dollar's decline is its effect on global trade dynamics. For emerging markets, a weaker dollar can reduce the cost of importing goods and servicing dollar-denominated debt, offering temporary relief. However, it also raises the stakes for maintaining competitive export prices, particularly in industries like technology and manufacturing. The interplay of these factors is adding complexity to an already intricate global trade environment. Energy markets have also been significantly affected by these developments. Crude oil prices have seen a downward trend, with Brent crude falling by 2% and WTI crude dipping by 2.3%. Analysts attribute this to lower demand expectations amid concerns about slowing economic activity. Natural gas prices have also shown volatility, further complicating the energy sector's outlook. While lower energy prices might offer short-term benefits for consumers, they are also a bellwether for potential slowdowns in industrial activity and economic growth. How do you think the decline of the US dollar will impact global trade? What strategies are you adopting to safeguard your investments in these volatile times? Do you believe the dollar will maintain its role as the dominant global currency? Share your thoughts in the comments below. The decline of the dollar is not merely a financial phenomenon. It has broader geopolitical implications. As the currency loses ground, questions arise about its long-term role as the world's primary reserve currency. Competing economies, particularly in Asia, are increasingly advocating for alternatives, such as regional trade agreements and currency swaps, to reduce dependence on the dollar. These developments signal a possible reconfiguration of global financial systems, with implications that could last for decades. Amid this uncertainty, investors are seeking refuge in traditional safe haven assets. Gold prices have surged to a 6-month high, reflecting heightened demand for stable investments. Government bonds, particularly U.S. Treasuries, are also seeing increased interest, despite the challenges facing the dollar. Meanwhile, cryptocurrencies, often viewed as a hedge against traditional financial instability, are experiencing mixed performance. Bitcoin and Ethereum have shown modest gains, though concerns about regulatory actions and market volatility persist. Looking ahead, the coming months will be crucial in shaping the future of global markets. Policymakers face the daunting challenge of restoring confidence through clear and decisive actions. Transparency, consistency, and a focus on long-term stability will be essential to reassure investors and stabilize markets. Failure to address these concerns could exacerbate volatility, leading to prolonged uncertainty. In conclusion, the U.S. dollar's recent decline underscores the intricate interplay between economic policy, global trade, and investor sentiment. This is a pivotal moment for markets as businesses and governments alike grapple with the implications of shifting financial dynamics. For investors, the key takeaway is the importance of adaptability and diversification. By staying informed and prepared, you can navigate these challenges and position yourself for long-term success in an evolving global economy. Thank you for staying with us through this comprehensive analysis. If you found this report insightful, please like and share it to help others understand the changing dynamics of global markets. Don't forget to subscribe to our channel and turn on notifications for real-time updates on the latest financial trends. Up next, we'll dive into the evolving role of alternative currencies and their impact on international trade. See you in the next video.